And I'm joined by John Feneck, our host, and we're going to be talking about some top ideas and themes for 2026. And I guess the World Cup soccer tournament isn't one of those.
No.
That's about to start. We're talking obviously about resource investment, John. And I want to sort of couch what we're going to talk. I want to sort of look at various different sort of commodity pockets and the investability or not there, and some of the things you're looking for in those specific commodities. And this is, I think, one of the things I want to try and draw out through this whole session is the importance of timing. And hopefully what we talk about will show that, because a lot of very successful investors, they make their money by looking ahead, what's going to be the commodities in demand in the future. How do I best position myself for that? So timing's a key thing in investment. It's not necessarily picking the best company, it's picking the better companies and letting the cycle lift you up to the promised land. Let's start with precious metals.
Sure.
The silver price hit record levels at the end of last year. Gold price, likewise. Is gold and silver still investable? Has it run its course? Is there more to come?
Absolutely more to come. I'll get to that in just one sec. I just wanted to address what you said about timing. I know we'll get to it later, but I think it's important for investors to align themselves with people like myself, or Don Durrett, who's been doing it as long as I have, or Larry Leopard, who's Don's other partner, who's been public track record for 20 years. I have a public track record for 10 plus years. You want to have investors that you that are mentors to you, that actually have experience through cycles. I just got emailed something from a competitor and it had a rocket ship next to it, and it was their 1 year performance. Like, I give a shit. If you do anything for 1 year, who cares? You have to do stuff over long periods of time, and you have to be able to show that resiliency, which is really being tested right now as we speak. It's very timely to be discussing this kind of stuff, right? Because the war really disrupted the rally that we had in a lot of stocks, in precious metal stocks. If you look at January, February price action, amazing for a lot of juniors and producers. But then February 27th, 28th, on that weekend, we had the war start. March 2nd was at PDAC. It was pretty much a party-like environment. I was there, and I was speaking at two or three different things that day, and I wish I sold more because March 3rd was a terrible day. And then it's been very volatile ever since. And the narrative has been driven by the US, right, in terms of the war with Iran. And you have to ask yourself as an investor, has the person that I'm working with, whether it's me, Don, Larry, someone else, seen cycles like this before? The answer is absolutely yes. And the second question is this a temporary phenomenon or a longer term trend, right? Because I took the position when Russia did their thing in 2022 that would be a multi-year situation. And I was the only person that I saw talking about that. I feel differently about this because of the midterm elections that the US face. If we didn't have the midterms, Trump could be digging in. I don't think that Trump can last another month or two without flip-flopping. So as investors, we have to look at that as an opportunity, right? We look at this as a temporary phenomenon that's affecting stocks, and you have to be able to act and take advantage of that, downturn. We'll talk more about that, Paul, but getting to your question, I'm very bullish silver and gold. Silver, as of December 31st, was an 18% position for us. As of March 31st, it's 15% on the nose. So I did sell some because I told people I was going to sell some. All my investors know this, right? Like I said, over $100, I'm selling some silver. As much as I like it, I don't think that this, I think that silver went up too fast. We didn't clip 121, but we were selling a lot between 110 and 120. So now at 73, I'm feeling really good about that. But if it gets lower, like to certain, buy zones, I would be a buyer here, and just add to my position. Gold has been the leader, right? Gold's going to lead us to the promised land. Gold will test 5,500 again within 12 months for sure, in my opinion. Why do I say that? Well, look at the big banks. Big banks like Citigroup is the only one I can think of that has actually retraced their estimate for gold over the next, for 2026. Everyone else is very bullish, meaning like Bank of America, JP Morgan, Goldman Sachs, the big boys are bullish. That's very bullish for us in the room. In fact, B of A just said I think 10 days ago, we reiterate 6,000 gold by the end of the year. I mean, this is amazing. So if we're sitting here at 4,400 this morning, I mean, there's a tremendous opportunity ahead of us in gold stocks.
Before we get to specific names, John, let's talk about the importance of positioning. You know, you're painting a picture of rising precious metals market. You need to be in the game to be able to benefit from that.
Yep.
And a good illustration of that, when the end of last year, the prices really did a very severe uptick. But if you weren't positioned, you'd have missed it. You blink and you missed it. You'd have been too late to benefit from that specific thing. The gold producers have just reported their first quarterly results. The better ones, their all-in sustaining cost margin is more than the gold price was this time last year. That's an illustration of just how violent that price uptick was. But you've got to be positioned to be in that game. How do you determine when to position?
You always have to have skin in the game. You can't get too cute with price. I mean, we buy 6 to 10 times on the way up on the average junior. We don't buy once ever, like some newsletter writers. I don't know how you do that correctly. Like, there's just too many variables. We may sell quickly. We may sell in thirds or halves, but we don't ever sell it all at once either, because we don't want to be disruptive. I don't know how many followers I actually have. I know how many paid subs I have, but I don't know how many of them are then sending out my picks to other people. So I want to be careful about how I sell, because I really do care about our sector. But in terms of, buying, this is the time you buy. I mean, like, we'll go through some of these in more detail throughout the day, and happy to answer any questions afterwards for anyone. But like, I'm just using some people I saw this morning. Aftermath Silver peaked out at $1.10 US. It's trading at 53 cents right now. Why is it down 50%? There was no negative news. I mean, it's just a tremendous buying opportunity. BlackRock Silver peaked out at $1.70 US. It's trading under 90 cents. I mean, I just interviewed Andrew. There's nothing there that came out of that interview that has me worried. So you can go down a list like this, right? Whether it's silver or gold, there's some really weird things happening in price action, and it's very disruptive to clients. I've lost more clients in the last 2 to 3 weeks than I've lost ever, including COVID. And that's really sad, because I know that clients, see this volatility and they get frustrated and they're just like, I'm done, right? You have to look at what we just talked about. Timing really matters. So if you were to be buying in January, February, you probably wish you didn't buy those stocks then. But now you have to look at the case for that investment and say, is the thesis broken? And the answer is probably not. It's probably the same thesis as it was in January, February, and you add to that position. So we've been adding to a lot of names that we have conviction in.
So one of the key aspects there is patience. The investments take time to reach their goals. Where in the Lassonde curve do you see value at the moment? Where are you sort of positioning amongst the producers, the smaller producers, the developers, the advanced explorers, maybe early stage explorers?
Yeah, so we used, since beginning in 2016 publicly, we've been using a hub and spoke structure, and we use the hub, meaning the core holdings, as mostly producers, and we do that through ETFs a lot. So we own GDX and GDXJ on the gold side. We own SILJ for the small stuff in silver, and then SLVP for the large stuff. And that encompasses about 20% of our whole portfolio. So that's how we get started. And we buy, I put out a piece on GDX at 80 bucks, I don't know, a month ago, and I just said, like, it's trading at a 29 RSI, relative strength index. This is a buy if you don't own it. And it literally bottomed right there. Like, traders are looking at this kind of stuff. When RSIs get to 30 or lower on your favorite stocks, you have to be buying if you still have conviction, because that's a really good, way to check. I'm always checking myself, right? And that's one way to check yourself. You go to something like stockta.com, you type in your favorite symbol at the top, and then in the center of the screen, actually, it shows you RSI on the stock. And if that RSI is 30 or lower, it's usually a buy. If it's 70 or higher, it's sometimes a sell. So when silver was cranking, over the last couple of months, silver's RSI got above 80, and at that point we started to sell. We're like, this is, getting ahead of itself, and sure enough, we saw that huge correction in January 30th.
Okay. Are there any particular precious metal stocks you want to mention?
Yeah, so I mentioned Aftermath Silver, AAG, FF in the States, AAG in Canada. I mentioned BlackRock Silver, BKRRF. in the States, BRC in Canada. In the silver space, we had Silverco up here. I met Mark through an interview that Don Durrett and I did. And I honestly hadn't followed the stock until about 3 or 4 months ago when I met Mark. And he's really got a clear vision to production, which I love. There's not a lot of silver producers out there. When you look at the universe out there, there's not a lot of them. You know, as Michael pointed out in his presentation, there's maybe 20 good ones, as he put it. I think Silverco has a possibility to be one of those good silver producers, and that one is SICO in Canada, SICOF in the States. On the gold side, we heard from Lahontan, which is LGCXF in the States, LG in Canada. I just interviewed Kimberly 10 days ago, if you want to look at YouTube. I mean, she was very casually saying, hey, look, we have almost 2 million ounces of gold, and we're going to get to production next year, and we're terribly undervalued. And she has a background in financing, right? So I think most of that financing is not going to be in equity. It's mostly going to be debt. And so that's bullish. It's in Nevada. That's bullish, right? It checks a lot of boxes for us. Kimberly's been serially successful in other parts of her life outside of mining too, which I like as a leader. So we should talk about people as well, because Kevin Bullock brought up from Next Gold that people is like the first check, the first thing that he looks for. And that's the same thing for me. So that's Next Gold is NXGCF in the States and NEXG in Canada. And Next Gold, I don't know if Kevin mentioned this to you, but they have 7 million ounces of gold. Like, I mean, they can pivot right now from Nova Scotia to Ontario or vice versa. And they're building out their team to build. So like when you're looking at a stock as an investor, you have to say to yourself, does this team really want to build this project? Or do they want to, kind of bluff that they're going to build it? Or are they just very honest and saying, hey, we're not going to build it. We're going to sell this at a very nice premium down the road. And so that's a question as an investor you have to ask yourself.
Well, let me sort of riff on that a little bit, because how important is it for a potential investment to have meaningful catalysts out there within, let's say, 12 or 18 months?
For us, it's 3 to 6 months mostly. Like I want to see action now. I'm not interested in if you're doing something in 2028 or something. It's like I mean, look, mining it takes time, but you have to have catalysts to keep investors interested along the way, and you have to be able to put out press releases that keep investors interested, right? So one of the things I work with companies is keeping in front of shareholders, even if you don't have news flow in the summertime or something. Put out a CEO message, right? Like do something. You and I talk about this all the time. I mean, it's important to stay engaged as an investor and make sure that the story is still what you thought it was. And a lot of times investors don't have time to call a CEO like I will and get that, directly from them. So I'm not really looking 12 to 18. I'm more looking like 3 to 6. Like
Okay.
I want to.
But it is important that there are those catalysts that could
For sure.
significantly impact valuation.
For sure, yeah.
Okay. Well, let's move on to copper. And within the sort of frame of what we're talking about here, we're going to talk about different commodity sectors. And there's, one aspect to successful investment is rotation from one sector to another, one commodity to another, because everything peaks and troughs at different times. The copper price story it's been very strong for quite a long period of time, despite a lot of the analysts talking about weakness. John, let's start there. Why has the copper price remained strong despite apparent headwinds?
Yeah, copper's an interesting one because it's a bullish metal, meaning it's not going to protect on the downside like gold and silver will, in my opinion. But it's clearly in a huge uptrend, and we pointed this out 3 times in the last month to investors. We sent 3 different emails on copper saying, hey, it's closing in on 6. Now it is at 6. Now it broke out to a new high at 642 or whatever it was that day.
Yeah, $14,000 a ton.
Yeah, and the copper juniors are actually starting to percolate a bit now, which is really positive, because if you look at the large cap copper names like Freeport and the like, you can buy that through an ETF called COPX. So we play the large cap copper stuff through COPX. So we pick individual juniors to complement that in copper. And one of the ways we play copper, Paul, is through companies that might have a different name, like US Gold. US Gold has a lot of copper in their project in Wyoming. So that one's USAU. Denarius Metals, who was up here, DNRSF in the States and DMET in Canada. A lot of copper at all of their projects, you know? So like, just because something is gold forward doesn't mean that they don't have a lot of copper as well. You have to do your due diligence and that kind of stuff.
Why do you think some names move more than others or quicker than others?
I mean, really, I think it's got to be a combination of not only good results and regular press releases, but also some marketing. People have to do conferences like this. They have to do webinars from time to time. They have to do road shows from time to time. The life of a junior CEO is not easy. It's a lot of work. And so you have to constantly be thinking about how can I get my message out there and get better shareholders in my share structure, you know? Like some of these share structures are really like I always tell CEOs, like, why not take care of the shareholders you have now, right? Because it's going to be difficult to keep replacing them over and over again, right? So you have to be able to build those relationships at events like this and then continue to build better shareholders into the mix, right? And in a bull market, it should be easier to do that. There should be more interest from private equity, from hedge funds, from generalist investors that don't have the same negative stigmas to come into a stock and say, yeah, that sounds like amazing. Copper's breaking out. I get it. Like I'll give you $1 million like to put into the next financing, right? So it's easy, you know, it's easy as a CEO of a junior company to just take money. It really is right now. But you have to be discerning and understand that that money's going to come out sometimes. And usually it's at 4 months and a day when the financing hold is over, and you have to be, you know, ready to have buyers to handle that kind of negativity.
Okay, this question is actually particularly pertinent for the copper space. The copper price environment is very strong and bullish. The macro environment is very strong and bullish. For the companies involved in exploring and developing the projects, the timeline can be very, very long. It takes a lot of money and a lot of time to explore a grassroots discovery and advance it up the value chain to economic studies and then on to production. So the question there is, the company may have a great drill result in copper, but they still could be sort of 10, 15, 20 years away from a production scenario. How do you recognize and avoid value traps in the copper exploration space?
I mean, copper exploration is, there's a long lead time to production, you know, so I trade a lot of those stocks. Like NAK is something I've traded for years. I don't know that NAK is ever going to get built. It's in Alaska. I don't think it's going to get built, but it's a Trump play. So is what is it? Trilogy, TMQ, I think. We've traded both of those successfully. We buy them when no one wants them, and we trade them out when things get too euphoric. You know, they've both had different types of issues in the same state, you know. So we trade certain copper things and hold others as a hub, like we said, like COPX, we never trade. It's just something we own. CPER tracks the price of copper. We wouldn't necessarily trade that in an uptrend, but we are going to trade some stocks. Yeah.
Okay. A lot of the things we're talking about, I sort of write about for Rick Rule's investment newsletter. So if anybody's interested in receiving the free newsletter, pass me your business cards, your email. We can add you to that. I've written about copper recently, precious metals. I'm currently writing about nickel. We're going to be talking about nickel in a bit, and uranium, and of course, critical minerals. Let's move on to critical minerals, because that's obviously a key theme a little bit later on today.
Sure.
And I know you've had a very particular focus on critical minerals and critical minerals companies, John, unlike a lot of newsletter writers. There's so many critical minerals, John. Where should people start? What are the perhaps key ones to focus on from an investment point of view?
Yeah, it changes from time to time. Right now, a lot of them are in uptrends. I think anything defense related, tungsten, antimony, niobium, you can go down a long list, are very, very interesting because China really dominates production of these metals, and that's not going to change. In fact, you and I interviewed, was it last August? And I remember you asking me about the $1 billion check that was being written by the US, and I said that's going to do absolutely nothing, and you used that as the headline. Thank you. So I'm glad you did, because US Exim then stepped up with a $100 million check, and then Project Vault was built with $12 billion. And so now you have $112 billion all of a sudden, moving towards critical minerals. And that really woke people up if they weren't awake already. But we've been seeing this trend from 2023. We were heavily invested in Perpetua then, Guardian Metal, GMTLF. Like, a lot of this stuff has made us a ton of money in our portfolio. So I think critical minerals are a huge component of anyone's portfolio, and that's what makes me different from a lot of people in the sector that are really just focused on gold and silver.
Okay, how do you separate the wheat from the chaff? Because with the critical minerals narrative charging, a lot of Vancouver juniors have suddenly got critical minerals deposits. They drop their cell phone, they've suddenly got rare earths on their project. And there seems to be a number of companies that have formed basically just to mine the US government from federal funding rather than necessarily having a project that's got any chance of going anywhere. How do you sort of pass out the good stuff from the bad stuff?
That's fair. I'll basically call CEOs and say, have you talked to the Trump administration? Have you talked to people at the DOD or DOE? Like, what's the game plan? Because talking to someone just starts the narrative, right? And then you have to get to the finish line of getting an actual check. So one of my stocks that I just mentioned, Guardian Metal, GMTLF, they had that discussion to get their $6.2 million check. They had the discussion 18 months before that with the government. I think American Tungsten is going to get more money, which is TUNGF. I think Stillwater, who I see in the room, PGEZF, is going to get more money, going to get actual money. Like, they don't have a DoD relationship right now, but Mike attended my DC conference 2 years ago, and he's been talking to them diligently. So it takes time, and that's when you're cashed up as a stock, which, by the way, all three of those are, then it's just accretive, right? When you get a free check, it's like, oh, okay, that's going to be a catalyst for new buyers to come into the stock.
Now, in the panel I was on earlier, we talked about financing and some of the invisible strings attached to money. There's no such thing as a free check, John. Well, what are some of the potential invisible strings when a company takes money from the federal government?
Yeah, I mean, I don't know. I'm not in that role, so I don't know exactly, but I can say that when you get in the door with the DoD, then you are open to other checks. Like, I'm talking to Guardian Metal like every month about this, and they're like, since we got the 6.2, we've had a number of other discussions about getting more, right? So, like, once you get that foot in the door and get started, it opens up doors down the road, and that's important, because I think something like Guardian in Tungsten, which is GMTLF, American Tungsten, TUNGF, Spartan, who's here, which is SPRMF, and then Western Star I had dinner with last night, WSRIF. All of them are positioned to get fast-tracked because their projects are needed. You know what I mean? Like, these are all in Nevada and Idaho. Like, at some point, it's not going to be about, like, here's how much money the Project Vault has or US Exim has. It's going to be like, oh my God, we need to build more Tomahawks and more whatever else immediately. And I think permitting is going to start much faster than people expect.
Okay. In a lot of the minerals narratives, things can change very quickly. The increase in US federal government funding for critical minerals is a case in point. From almost out of nowhere, suddenly this is a big issue, and the government is increasingly looking to fund that. These kind of catalysts and also black swan events can come out of nowhere. Some of them are perhaps more foreseeable, and I think let's talk a little bit about nickel, because that's certainly the case. The nickel price is decimated by the rise of Indonesia as a producer, but Indonesia is now looking to getting more value from its nickel and putting measures in place to support pricing. As a result of that, the nickel price, I think you could safely say, has bottomed and is starting to improve. Is that an opportunity for investing in Western nickel companies?
Absolutely. And I've got two of them on my panel coming up here in a little bit, which is Stillwater, PGEZF, and PGE in Canada, and Power Metallic, PNPNF, and PNPN in Canada. I think they're two of our larger holdings in junior nickel stocks. Why do I own stuff like that before the bottoming, right? Well, the answer is because of Russia. Indonesia, absolutely, but Russia is a huge player in nickel. And Russia has been funding the war by selling things like nickel, platinum, palladium to other parties to fund the war effort for 4+ years now. So that's one of the reasons the 5-year chart of nickel looks so bad, you know? But you have to say to yourself as an investor, how much longer can this go on? I don't think it's like years. I think it's months. And so that's why we're getting more interested in buying nickel related stuff.
Okay, let's move on to sort of uranium as well, because you mentioned the Russia-Ukraine conflict. That started making people worried about energy supply, energy security concerns, certainly in the European Union. That has been intensified this year with the Iran conflict and obviously the closure of the Strait of Hormuz. And that adds to a broader narrative about the electrification of everything and the need to provide, baseline power, so to supply and power the electrification of everything. To what extent, is energy security? How significant is that as a driver for uranium, also for things like copper and nickel?
Yeah, uranium's an interesting subsector in the commodity world. We don't have a lot of exposure there right now. We have, from time to time, we buy URA, which is the ETF, again, that holds Cameco, Denison, et cetera. And we've traded that successfully 2 or 3 times in the last couple of years. But we don't own it right now. I've been playing traditional energy since March 1st, more.
Oil and gas, that kind
yeah.
of thing.
Mm-hmm. Because I think oil's rise is here to stay, whether we like it or not. It's on the uptrend as a subsector. And this war has really brought, investors, like, if they didn't understand this before, now they understand it, much better in terms of like how just a little place like the Strait of Hormuz can affect pricing. It's crazy. So we like uranium, but we think that it's sort of like copper to us. Like copper, large caps have done really well over time, where copper juniors, they have to be really selective. Same with uranium. Like the big boys have done extremely well, but the little guys, you have to do more due diligence on.
Okay. Now, we've talked about various different commodity sectors, John. In which commodity sector do you see the best opportunity now, today? And which do you see the best opportunity sort of tomorrow in the not too distant future?
Yeah, sure. Gosh, I mean, I think gold juniors and silver juniors are insanely cheap here. I wouldn't say that February, but now I will. Things are just ridiculously priced. I mean, you have to be able to put bids out there. And the way we do it at Feneck Consulting is we put a bid out towards the action, meaning like 1 or 2% behind whoever's out there on the bid. And then we put a stink bid out there, maybe 8 to 10% away. On days like today where there's a lot of volatility, you might get filled on, just a power seller out there. So we try to buy, intelligently and not get emotional about it. But I would say alongside of gold and silver related stocks, we love defense metals and critical mineral stocks. I mean, they're just ridiculously cheap as well. I mean, if you look at rare earths, they were cranking last year, right? We were talking about that in an interview. Some of these things were up over 1,000% in just a matter of a couple of months. But then, the Trump high five, as I call it, in November happened with China, which is total BS. That's never going to last. And so you look at that as an opportunity and say, now I can buy some of these rare earth stocks 50% off, right? I mean, that's what really happened during tax loss season. So you have to look at these little buying opportunities and take advantage of them because we're still in the framework of a bull market.
Okay, well, that's all we have time for, John. I'm going to hand over now to Anthony Vaccaro for more on critical minerals. Please join me in thanking John Feneck.
Yeah. Thanks.